Hello, everybody. My name is Aga, and I present the CoinTracking marketing team. And I'm here today with Richard Lalor from Ireland. He's our tax expert in Ireland from Lalor and Company. Hi.
Hiya.
You probably know CoinTracking as the biggest and most trusted crypto tax calculator and portfolio tracker on the market. And if you haven't tried it yet, just please go. There will be a link for you in the description for a special discount as well. So you can either try it for free, or if you want to buy the premium version, there's a special discount already rating there for you. And Richard, what do you guys do?
Oh, yeah. Well, we're based in Ireland, and we are tax consultants and chartered accountants. We specialize in crypto tax in Ireland because I see very few accountants generally are eager to go near this space, but we
True.
think that it's something that isn't going to go away anytime soon in some manner or
Hmm.
form. So let's embrace it with both arms. It's still taxable. It's the revenue you're looking at it. Everyone's looking at it. So there's no point in burying our head in the sand. So we're
Exactly.
number of discussions with the Irish revenue at the moment about certain aspects of the tax system and crypto. So we're very much on the forefront of this movement.
Okay.
Yeah.
So let's just move right to it. So how about those taxes in Ireland
Yeah.
on
Well,
crypto?
the first thing I should say is that revenue have issued guidelines. The Irish revenue have issued guidelines. They haven't. There's nothing concrete yet. Um, they sort of
So
take
how
it.
do you do this? If there's no there's no concrete solutions, what do you do then?
Well, they've sort of taken the stance that it's the same as other assets, up to a point. So you apply the normal Irish rules. Um,
Hmm.
so based on the nature of it, unfortunately, all these answers are going to be it depends. But the three tax heads that apply for cryptocurrency transactions are capital gains tax, income tax, and corporation tax if you're a limited company or
Hmm.
company. So it all falls under one of those nets, depending once again on the nature of the transaction. The one thing I should say from the get-go is it's really important is from the CGT perspective, which more often than not is capital gains tax.
Hmm.
Uh, the only method used in Ireland, allowable in Ireland, is the FIFO, first in, first out. So that's a huge
Hmm.
part of the Irish tax system in crypto. So I just want to get say that from the
There's
get.
no problem from the coin tracking perspective. We can do that.
CoinTracking is amazing for that because it automatically applies it to the Irish system. If you say Irish and everything like that, it can apply it immediately. It's yeah. Look, at this stage, from a tax consultant's perspective, tax mapping software is essential. Things get so complicated and convoluted, and
Mm.
employing something like the FIFO system only makes it harder. So I don't.
Hmm.
Coin tracking is brilliant for something like applying the FIFO method because uh, otherwise it's all wrong, and you can't do cost basis or LIFO or anything like that. It has to be FIFO, and that's why you need to use mapping software like coin tracking.
So you do have rules.
Oh, yeah. So look, there's a lot of rules. I mean, it's just which rule you apply. Yeah.
Okay, so what does it look like in practice? Like what kind of clients do you have, and what sort of crypto
A lot of
transactions do
clients,
we do?
a lot of clients who are just very savvy investors, who believe in the space and have had all sorts of different types of transactions. Obviously, it's moved into DeFi a lot in the last year or
Hmm.
two, and so we're seeing a lot more of that, and bridging to different chains and just transactions becoming a little bit more complicated, let's say. But you still just go back to first principles when it comes to tax and you try and apply it as best you can. And once again, that's a very hard thing to do manually, and that's where you do need tax mapping software such
I
as
see.
yeah.
Okay, can we go through the basic types of trades that people do, and sort of try to reconcile them with the type of taxes you would have to do for them? So
Sure. Yeah.
let's
So
start
I
maybe.
suppose the most common one would be if you buy, say you buy with euros or dollars, you buy a Bitcoin. Okay,
Hmm.
there's nothing's happening there. But if you sell that Bitcoin to buy some Ethereum, you
Hmm.
created a chargeable event for tax purposes. So by using crypto to buy more crypto, crystallizes a gain or a loss on the part of the crypto that you sell. So it's very important to note that it's not when you convert it back to fiat or remit
Mm,
it into your bank account. It's when you sell that in this example, that first Bitcoin. When you sell part of it or any aspect of it,
mm-hmm,
it's cost price less, it's sales price less cost price, and the gain
mm-hmm.
is then taxed. And I should have said this at the beginning. Capital gains tax is 33% in Ireland
Not
on any
bad.
gain. Yeah, yeah, yeah. I suppose I'm jumping ahead a little bit here. The capital gains tax is at 33%. If you have trading income, passive income,
Mm-hmm.
like a form of interest, that's income taxable, and that's taxed at, depending on your other income. But in Ireland, it can be taxed at the marginal rate of income tax of 40%. It can be taxed PRSI 4%, and USC in a sliding scale of up to 8%. So you can be over 50% income tax in certain circumstances on your
Okay,
passive
so
income. Yeah,
it pays to have a good accountant on your side,
yeah,
I
you'd
suppose.
need it. Good. I know, like it's kind of obvious, but a good accountant and good tax mapping software would be essential for, especially if you've got a considerable amount of trading, in terms of volume, and quite often people do it crypto. There's a eagerness to buy and sell manically. So,
Mm-hmm.
uh, yeah, that's when it gets tricky. Yeah,
Okay, so we've got the crypto to crypto trades and the fiat trades. How about like disposals, others like gifts or
yeah.
purchasing things with crypto?
Purchasing things with crypto, yeah, yeah. Obviously, if you purchase something with crypto, if you think about it, if you buy that one Bitcoin, and say it's at $10,000, and then the price of the crypto of that Bitcoin rises to $20,000, and you are using that, you then use a portion, a percentage of that Bitcoin to buy some pizza or
Mm-hmm.
buy something. You are crystallizing a gain there, of a certain percentage of that Bitcoin. So anytime you buy something with cryptocurrency, you are potentially crystallizing a gain, which is a chargeable event for CGT purposes. So be very careful of that.
Okay.
Sorry,
And the
what was
gifts?
the gifts? Yeah, a gift to crypto. Yeah, it's a CAT in Ireland. It's called capital acquisitions tax, gift and inheritance tax, and it's the market value at the time you receive it. You get a Group A threshold if it's a parent to a child of €335,000. If it's a blood relative, a lineal descendant, like a brother or sister, uncle or
Mm-hmm.
auntie, it's a Group B, and it's 32,500. And then if it's just a stranger, someone you don't know, it's 16,250. So if you receive a cryptocurrency as a gift from anybody that exceeds any of those thresholds, you will pay capital acquisitions tax at 33% as well. So be
So it's all
careful.
taxed, basically.
Oh yeah, yeah, yeah. There's no way Ireland will let you away with not taxing anything. Yeah,
Yeah, unfortunately.
yeah, and I just wind up your conversation for now. But people who are non-domiciled in Ireland but are resident in Ireland, the scope of Irish tax really applies to. There's three factors: there's residency, ordinary residency, and domicile status. So domicile is if you were born here.
Mm-hmm.
Uh, So if you are non-domiciled but have been living here for several years, there are certain advantages. It's under the remittance basis, but it gets complicated. But there are possible benefits to that if you find yourself to be one of those people. But that's a conversation for another day.
Yeah, that gets complicated. I have a feeling we're gonna say that gets complicated a lot, but it's
Yeah,
crypto
sorry,
and it's taxes together, so there was no way around
not
it.
matrix too much. Yeah, yeah.
Yeah. How about income? So
Income.
how?
Yeah. Well, look, I'm seeing some horror stories about income at the moment.
How
Well, first
so?
off, sorry. The one question that people always ask me is like, I'm doing a lot of trades. I'm doing a huge amount of trades.
Mm-hmm.
Is it not considered, therefore, trading income? Income tax as opposed to
Ah,
capital gains tax. Now,
I see.
the main when trying to ascertain if something in Ireland is deemed to be trading or not, we have to talk about the badges of trade. And there's just a whole list. It's a list of um, it's a list of events that would consider trading, such as the subject matter of the sale, length of period of ownership, frequency of transactions, the circumstances that were responsible for the realization of the sale, and the motive behind it. these are used when trying to ascertain if it's trading income or not. Now,
Okay.
it isn't, even though for the average person, if it's deemed to be trading, it's going to cost you more. Um, Sorry, is that okay, Aggie? There's a connection issue.
I think you could repeat that. Yeah.
Okay, okay. So trading income, although it may seem less advantageous for someone for it to be considered trading income,
Mm-hmm.
the Irish revenue do not want you to have, more often than not, would rather it wasn't deemed to be trading income, because if it's trading income, any trading losses you incur can be offset against um, other trading income. So a big one was in the UK in the 2000s, sometime 2004, I think. There was a pharmacist, and he basically went upstairs and he started trading. And he kept his pharmacy going, operating downstairs. And
Uh-huh.
um, he did it over a number of years, and he got more into trading. And he then decided to declare himself as a day trader.
Mm-hmm.
And that way, and he didn't do very well at times. So the losses he made on trading, he used to offset against his profits on his pharmacy business. So the revenue, the HMRC had a look at this. It's Ali versus the HMRC. The HMRC had a look at this. They said, no, we're not going to allow this because we don't believe it constitutes a trade. He appealed it. It went high up, and it was overturned. The main ground for that is that the reason it was appealed and won was because he satisfied four of the badges of trade, and I think that more importantly was that he had a business plan in place. It wasn't a very good one, and it wasn't a very sophisticated one, but he had a business plan in place regarding the trading. Didn't work out very
Ah.
well, but that allowed him. Now that's an exception. More often than not, we find people are doing high frequency trades, um, high volume, high frequency, high
Mm-hmm.
amounts. The revenue will not look to call you a trader. It'll be, even more often than not, it's CGT, even if it's a huge
Hmm.
amount of trades. So I you'd have to apply for it. It'd be scrutinized massively. The general rule of thumb is it's going to be capital gains tax, regardless of the amount of transactions you do.
Okay, so we've got that covered. But depending on the type, is it like liquidity pools, staking, lending
Yeah.
interest, yield farming? Does that matter, or is that all sort of income and that's it?
Oh well, all the thing, everything you mentioned there, especially the DeFi, that would be passive income, the case three passive income, and case three income from an Irish tax perspective, and it's a very dangerous field, and I would tell people, to be careful. But I have these horror stories of individuals who were earning a lot of income from staking
Mm-hmm.
a node, and they were receiving payment in that
Mm-hmm.
token. Okay, and the payment receiving in the token, obviously, the revenue deemed that to be they're receiving income at the market value of that token at that date. So
Mm-hmm.
say, I don't want to give an example. Say strong is a node, and say you received uh, in September 21, you received a reward for staking of one strong. Now the value at that time in September 21, the value of one strong was $1,400. Okay,
Mm-hmm.
so you're deemed to receive passive income of $1,400 at that
Right.
date. Now, you only pay income tax in Ireland in the year following the year of assessment. So if the year of assessment is 2021, you pay the income tax by the 31st of October 2022. So
Mm-hmm.
now, so now anyone who has, so for example, in that example, um, the one node, which is deemed to get $1,400, you have to pay income tax at that one up to 52%.
Mm-hmm.
But the current value of strong is $6.50. So if that wasn't
Yeah,
great,
we've seen that
so,
happen.
so it's a terrible thing for people. It really is. You need to be very, very careful. And with these DeFi protocols, it depends. More often than not, it is income, but it really depends
Mm-hmm.
on the protocol itself. Like if you're adding to the liquidity pool to uh, accrue value to the token itself,
Mm-hmm.
that is more CGT. Okay, that if you're at, it's only when you then unstake, that's when there's a taxable event, which is CGT.
Mm-hmm.
If you're receiving rewards, like I just said there, like for staking or farming or anything like that, that's income taxable. Um, That's income taxable all the way. Yeah. So it really depends, unfortunately, again.
And
On
it's complicated once again.
yeah, and that's why, honestly, it is why something like contracting is so important.
Well, it
Because,
does make life a bit easier, even if it's a bit
yeah,
complicated to start.
yeah, well, it can ascertain the value of the token, that the reward that you're receiving at that date and time, as opposed to you having to try and manually do it. So it's essential, really. If you're getting to that level of complexity, you really do need mapping software. Yeah.
Mm. Okay. How about NFTs? Or
NFTs are treated the same as other crypto we've mentioned. Now, if you buy and sell NFTs, it's like capital gains tax, really. So you buy it for, if you sell it for more than you bought it, you have to pay 33% on the difference on the gain. Um, Now,
okay.
if you're a creator of an NFT, it has an intrinsic, it has the base cost, the cost price is zero to you. I suppose
Mm-hmm.
the only thing that has come up with us before is, once again, is it badges of trade? Is it income or is it capital gains tax? Are you an
Mm-hmm.
artist who's creating a lot of NFTs? Is this your trade? Is this what you do?
Mm-hmm.
Should this be considered trading? And at that point, then there's something in Ireland called the artist exemption. So if it's an original piece and it's deemed to be uh, uh, it's deemed to be regarded as having cultural or artistic value or
Mm-hmm.
merit, and you could get something called the artist exemption, which is up to €50,000 tax free. But we'd have to apply, and they would look at you and scrutinize you. But if you are an artist and you're making NFTs, there is an argument to say it's income, and if it is income, we look at the badge of trade and we apply for the artist exemption.
So that would be one of the ways how you can reduce your taxes, basically, if
Yeah,
you're an artist.
if you're an artist and really like the revenue, it's certainly worth applying for, but we'd have to talk to them about it. But that's I believe that to be an argument, yeah, for artists. Yeah.
I see.
Otherwise, it's just simply the same as any other token or coin. You are buying and selling NFTs for CGT purposes.
Mm-hmm.
Yeah.
Okay, so on another topic, what would be your take on gaming and all the income you can
The
acquire
rewards.
from those?
That would be
Yeah.
another form of passive income. That would be that once again. That would be unearned passive income, case three, and it would be deemed to be received at the date. It would need to be the market value of the
Mm-hmm.
reward would need to be valued at the date you receive it from a euro from a domestic currency point of view.
Mm-hmm.
It would be income taxable on that. Yeah, and you need to pay it. Sorry, the most important thing about all this is that, just from a tax point of view, if it's capital gains tax, the Irish system is pay and file. Okay, so you pay the tax first and you file
Mm-hmm.
after. In Ireland, if you make a gain between the 1st of January and the 30th of November, you have to pay the capital gains tax by the 15th of December. If you make a gain between the 1st of December and the 31st of December, you have to pay the capital gains tax by the 31st of January the following year. Both those periods, then, the filing of the return has to be made by the 31st of October the following year.
I see. So once
Yeah.
again, it's complicated.
It's complicated. And if it's income tax, it's January, 1st of January to 31st of December. You pay and file by the 31st of October the following
Okay, so how about, because we've had some interesting examples in other countries with
year.
silly games, like you have those cute NFTs and you merge them and then you sell them with like the local currency, and then with that currency you buy something else like a better NFT or something like that. Does that constitute separate tax events, or is that, or how does that work in Ireland?
Yeah, yes, yes, it would be the same. Yeah, I mean, if it's a reward for gaming or a reward for staking or any sort of reward, it would be income taxable at the date you receive it. Uh, and then if you go on to hold it,
Mm-hmm.
or I'm not really sure that they do it, but if you go on to hold it and then it grows in value and you then sell it at a later point, that will be capital gains tax. And the base cost, the cost price for you will be the date you received it and paid income tax on. And then the sales price will be the date you sell it, and any difference in those two will be liable to CGT.
Okay, so basically you have to track everything
Oh
all the
boy,
time.
you need to track everything, and it's not an easy thing. Yeah, people are often surprised at how many transactions they've actually made, in a year.
Yeah, been
You know,
there, done that,
yeah,
obviously.
yeah, yeah, yeah.
Is there any way, are there any events that are tax free, or how
That's
does
very
that work?
well. I mean, transferring the crypto you already have. So if you receive an airdrop of something, a reward, and you deem to pay the tax on it at that point, but you could transfer those to another wallet or onto an exchange or things like that.
Mhm.
You don't have to. A taxable event if it only occurs really if you sell it or you use it or stake it for something, or something like that. So yeah, I mean, just transfer between wallets, really, holding it and buying it. That would be
Mhm.
the main tax-free.
So pretty much nothing. How about how about wrapping coins? I mean, I'm sorry, this is just tax life. It just everything is taxed
Everything is
basically.
everything is getting you. Yeah, yeah. No, wrapping is wrapping to bridge it to the networks. Yeah,
Right.
it's yeah. No, we would believe that to be that doesn't crystallize again. No.
Okay, well, at least something.
Yeah, 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 yeah. That's good.
Okay, so we've got the instance of the creators that can get an exam from taxes. What else can we do?
Sorry. Yes. The well, people like to call it harvesting tax losses.
Hmm.
It's making the most of your losses by crystallizing the loss at the right time. So as I mentioned before, the CGT period in Ireland is the 1st of January to the 30th of November. And if you have if you have losses, and you want to use them against gains you've made in any of those periods, the best thing to do would be to sell that coin and use that loss to offset against the gains. And you can,
Hmm.
with capital losses, which is what a CGT loss is, capital losses can be carried forward indefinitely. You can't carry them back, but you can carry them forward indefinitely. And capital losses aren't just for crypto. I mean, they can be for normal stocks and shares, they can be for houses, or any capital loss can be
Hmm.
used to offset against another capital gain. Now, there, I don't want to get into too much detail about this because it's just convoluted and boring. But I don't know. Have you ever heard of the wash rule in the United States?
Yeah.
It's called the 4-week rule or the bed and breakfast rule in Ireland. And basically, it's Section 581 of the Taxes Consolidation Act. And in that, it says that if you acquire a certain asset and you sell it for a loss within 4 weeks, that loss cannot be used against other gains. It has to be ring-fenced against the other gains of that specific asset.
Hmm.
Now, if you dive into the legislation, you'll see that it relates to stocks and shares only. So there is a huge argument to say that cryptocurrency does not constitute a stock or a share. And I know I won't go into the depths of how far we've gone with this. But the
Hmm.
guidelines then on that section of the Taxes Act, revenue issue guidelines in each section. The guidelines have thrown in stock shares and other fungible assets. If it's a fungible asset, obviously cryptocurrency will come under that heading.
Hmm.
So certain mapping software have incorporated this 4-week rule into their algorithm, which I'm not saying CoinTracking, but we don't believe that necessarily to be correct. And if that is the case, it means that you could, for example, on the 30th of November, you could have
Hmm.
a cryptocurrency that you really like, but it's performing badly. You don't want to get rid of it, but at that point in time, it's performing badly.
Hmm.
You could sell that cryptocurrency before the 30th of November, and you could buy it back immediately, thereby crystallizing the loss to use against other gains, and then you still have that token, and you could use that loss against other gains. Whereas
Hmm.
if the 4-week rule is imposed, you wouldn't be able to use that loss against the other gains. So it's a kind of a pending process. We're speaking with revenue, have been doing so for several months. I think we're going to be correct in saying that it doesn't apply. But really realizing your loss or crystallizing your loss is the best way to mitigate against gains. Yeah,
Makes sense. So it's convenient that we've got the perfect report for that in
perfect
coin
report.
tracking.
You really
So
need that report. Yeah, yeah, you do. Yeah.
it's actually one of the most visited sites on in coin tracking. So I think people are
Look, I
realizing
actually
that.
think it'd be madness if you are involved in cryptocurrencies. I think it'd be madness not to use tax mapping software such as CoinTracking because there's no way you can get it right on a spreadsheet otherwise. And like more than likely it'll work in your favor, to use
Mm.
software. So I do truly believe that.
Okay, so we're pointing slowly towards the end.
Uh,
So the dreaded question: what if
mm.
I don't file my taxes? What if I believe that nobody sees my coins or my assets, and then what?
Yeah, well, I mean, look, I won't go too deeply into it, but the crypto asset reporting framework is being rushed through, whereby the intermediaries will have to report on all the users they have. But from just solely taxation point of view, it would be treated like any other tax, any other transaction in Ireland. Very simple. If you with a pay and file system, so if you pay late, you would be subjected to interest on the late payment. Uh, Like I said, for example, January to November has to be paid by the 15th of December. So say it's 2022 and you don't pay your crypto, you decide you don't want to pay your capital gains tax. The revenue may look into you down the line, and if they feel that you should have paid it by that date, they will apply an interest rate of 0.0219% a day on the late
Per
payment
day.
per day, 0.0219% per day, which comes to just about 8% in the year, which I suppose isn't crazy, but if they're looking back on you in 3 years' time,
Mm,
that could be unpleasant. So it's at the discretion of the revenue to apply interest. The late filing of the return also applies, and the late filing is an automatic surcharge, mandatory surcharge. You can't do anything about that, and that's 5%. If you're less than 2 months late, it's 5% of the tax, and if you're more than 2 months late, it's 10% of the tax. So there
so
could be penalties as well. Yeah.
just do your taxes, I suppose. Then
Well, the problem is, you'd be looking over your shoulder for a while.
mm,
Everything get calibrated to the new system, and I couldn't tell you that the revenue are up to speed. That would be wrong to me. But who's to say when they will get up to speed? And
yeah,
that's the problem.
and
Yeah.
then you're in trouble.
Yeah, then you are in trouble. Yeah, and it's I can help you, but at the end of the day,
There's limits.
you're playing with fire. Yeah, you're playing with fire. Yeah, yeah.
Mm. Okay, so to just wrap it up, what would be your guidelines for people who deal with crypto to just take the stress out of their tax season? What can we do?
I would say that look, I know that it has been a tough year for a lot of people, and I know the option, the idea of burying your head in the sand, especially now because you might have losses and you think, well, what's the point? But you really should. The sooner you get on top of it, the clearer your head will be. The better you'll know more going forward. Um, you should bear in mind that the deadline is for income tax for 2021. The deadline is fast approaching. It's a month away.
Mm,
So any passive income that we've talked about, staking income, rewards, airdrops, anything like that the deadline for paying and filing your tax hasn't yet occurred, but it's coming soon, 31st of October 2022. And then for capital gains tax, anything earned in 2022, the payment date is the 15th of December. So it's not too late at all. And I think the best thing to do would be to log on to CoinTracking and just set up an account and just start using your APIs and CSV uploads. And they're very helpful and it's very intuitive software. So you'd be surprised, really, maybe what you have. And it's always better to know.
exactly.
Better off knowing. You sleep better.
Yeah,
Yeah.
sleeping is important. Richard, thank you so much for being with us today. I think you've made a difference, and if any of you guys would like to get
Yeah.
some professional help, you can find all the details for Richard and Lalor accountants on our webpage with the partners. Please remember that we do have a discount code for you in the description. Um, It's going to be valid until the end of October, so it's going away at some point. And if you just want to try coin tracking, it's free. Just go log in. We don't even need your email. Okay, if there's any questions that we haven't answered for you, please don't be shy and find us on Discord or on forum. We have a great support team as well. So if you have any questions or you need any technical support, please don't hesitate to contact us. All of the links will be in description for you as well. So thank you for being with us, and hope to see you soon. Bye bye.